Jim, welcome back, buddy. It's great to have you. I
Thank
bet
you.
you could I bet you could probably predict what I'm going to ask you about today. Can't Go ahead and make your
Well,
best guess.
can you hear me, first of
Yeah,
all?
got you, bro.
Okay, let me grab the screen.
Okay. All
I,
right.
I don't I don't know. What are you going to ask me about?
Oh, you know what I'm going to ask you, Jim. Jim, I want to know what you were thinking when you saw that day of the VIX going to 60.
Yeah,
And
so
what were your thoughts? Were you thinking, wow, this is really an extreme magnified move for the kind of move we had in S&Ps. Um, and if you were trading any of those instruments, were you able to get trades off while that was happening?
well, but before I launch into my obligatory slideshow, I'll answer that last question first. Um, I didn't try to do anything that morning. Um, and people I know who did try were very frustrated. Um, the VIX printing at that level in the 60s made no sense and could only have happened pre-market, and right around 8:30, which is when a lot of dealers um, tend to refresh their quotes. So there was a lot going on, and it was mayhem. As somebody I think recently pointed, or just a few minutes ago pointed out, that we had the yen thing going on. Tokyo was crashing,
Yeah.
um, and the bid-ask spreads for S&P options just went historic wides.
The markets
You
were very inefficient that day, completely,
the
weren't they?
the markets were very inefficient that day, no doubt about it.
Okay.
Um,
I even want to ask you, look, I own 20 the VIX Dece, okay, 20
hmm
calls.
hmm
And I'm not even saying top tick. Let's just say even on the way down, okay? They didn't make markets in those options because you
I,
should did you hear about that? Because there should have been intrinsic value of $10, $20, and I paid two for them, and the
hmm
most that was offered was four, with them being, many, many, many handles into the market. So, I thought that when this would happen, I didn't think it'd happen in one day, but it was a pretty crowded trade selling volatility. Did people blow up, or were they able to avoid it because they just sat and didn't have to cover their short vol positions?
I have not heard about anybody blowing up.
Man,
There
that
were
should have been
some,
a blow up day.
well, I think again, um, it happened fast. It happened off hours. There weren't any margin clerks sitting at their desks looking at VIX on Monday morning pre-market. Um, and in terms of market makers, um, I mean, this goes into a longer conversation about market structure and the way things work today versus the way they worked 5, 10, 15, 20 years ago. You and I have been around a minute.
Yeah.
Um, so much of this is now electronic, and with algos behind the electronic quotes. And if you're Citadel, Susquehanna, pick one, um, and things get wiggy, your computers are instructed to widen spreads and or go offline essentially.
Wow.
So you know there's more liquidity in the market today than there ever has been, and that liquidity um, is has a very short fuse on it when things get out of line. So the liquidity disappears very fast relative to, what it was when we were kids. Um, Now, when we were kids, you couldn't trade VIX options around the clock. So,
Yeah.
again, we've got benefits, but um, they're not free and they're not guaranteed. So, you
Yeah.
know, I I I'm a simple man, Dale. Um,
Love that song. A simple man.
all of the things that I do during regular trading hours. I accept the possibility that I'm going to have a gap work against me. I manage that through position sizing,
Okay.
and so I didn't have my hair on fire the morning of August 5th. First of all, if you woke up on August 5th and you said, "Holy crap, what's happening?" You weren't paying attention because this all started in the middle of July,
Yeah,
and
that's right.
so too bad if you were on the wrong side of August 5th. You shouldn't have been on the wrong side of August 5th. And I don't have any specific uh, slide in my deck,
Yeah.
evidencing that, but I've posted on Twitter.
Well, they
Anyway,
have ETFs, Jim, that utilize that vol selling strategy that people buy.
yes,
There
they
are
do.
right? So, I mean, that's once something becomes an ETF, it's not secret anymore. Uh,
It can be a relative secret, right? If you're deep in the weeds the way you and I are, we're gonna identify these instruments that are out there, and you've got what I refer to as the plain vanilla volatility exchange traded products that give you either short or long exposure.
yeah,
SVIX, SVIXY, UVIX,
yeah,
UVIXY, VIXY, and VXX. And then you do have some what I refer to as strategy instruments. SVOL is the biggest one out of
yeah,
Simplify Asset Management, and I know those guys well. Which is short VIX futures as part of a package, because they also take a position long VIX calls as sort of their hedge. If you put up a chart of SVOL, they did get whacked during that period. But they recovered very nicely as well because, being systematic has advantages. There were people who got whacked and then were frozen. They had PTSD.
yeah,
You needed to be willing to pivot because, and, if you can see this slide, um, not only did we go up as fast as we've ever gone up, we went down faster.
yeah. Right. Down is faster.
And it was a collapse like no other, as my friend Dean Kernett posted on the Twitters. Um,
Yeah,
if we look at, here's where we ended the first half. These were the first half highlights, and I think I did this on one of your shows.
yeah.
2023 was the year of no fear.
Right.
First
I
half of
remember.
2024 was just boring. There
Yeah,
was no volatility. That obviously changed in the we we doubled even before we got to August 5th, right?
yeah.
So on June 30, $12,
I
up
remember
to
that
almost.
interview. They had vol priced in at about 18 because of the election.
Yeah, in the
And that
October
was high.
contract.
That was
Yeah,
high because we were
yeah,
12 then or
yeah,
so.
yeah.
Yeah.
That
Okay.
was that hump in the
Yeah.
October contract. you
Yeah.
know and this is what it looked like. You went from 12 to 66 in a month.
Yeah.
And that doesn't make any sense. um Interesting, we saw demand for tail hedges more than double even before we got to the 5th. It doubled again um into August 5th. It was crazy.
Yeah.
We had in the first half VIX was near record lows of 2017, right?
Yeah.
Well, that's changed a little bit. We got up there on a closing basis. We were in the high 30s. That print in the pre-market, didn't hold up even on August 5th. Um,
Right.
you know,
Right. So
it's
we're in a new regime. So do you believe that that was aberrational and a one-off, or is it foreshadowing
you
what could
know,
be coming?
I think right now, the worst of the PTSD seems to be over, right?
Okay. All right.
We're rallying on the back of the Fed cutting rates by 50%. You guys, covered that before I got on. Um, will this? So, we were facing some known unknowns. One of which was what's the Fed going to do, and
Yeah.
what message are they going to deliver? Okay, we've checked that box. We still have an election in November, which, if you believe the polls, maybe a toss up right now. Who knows? I think either way, it sets up for some additional volatility uh, because, if it's Trump, he's highly unpredictable. If it's Harris, I would suspect that the fiscal spigots are going to be opened up again. And, what's that going to do to the economy and the debt deficits? Um, it probably is going to widen all those numbers out. So I,
How about if the result is challenged by
oh baby,
either side, and you know it's going to be, right?
oh
So
baby.
so how about we don't even know? I mean, how long did it take before they settled the Bush Gore election? A
It took
few
a while,
weeks?
right? It took a while. And
And,
so let me skip ahead. Let's just make this more of a conversation.
yeah,
And get to a couple of things that I think are important. Um, this is the volatility term structure using the SIBO indices, which I like because they're constant maturity, right? With the VIX futures, you've always got the roll you've got to factor in. Um, this is what it looked like at the end of June, right? We had the April scare in the red,
yeah,
but we were back down. We had contango. I mean, we had a spread from the front to the back of, 8 points, with the front at, with the VIX at 12. Here's where we sit today. We had August 5th, obviously, just straight up backward. Um, the end of June, which is a carryover from the other slide, we're in this state where everything's elevated, not crazy elevated, but we got the back end above 20, VIX at 17-ish. It's going to be down a little today. But it has flattened out. And it's even more pronounced if you look at the VIX futures term structure. That green line in the middle is where we were yesterday. And that's,
yeah,
less than a point
yeah.
wide from front to back. So what's that saying? What that's saying is
So
nobody wants to sell hard on the front end, but the back end has not got a real bid either. So it's kind of suggesting to me that the market is relatively sanguine about 2025, at least at the moment.
okay,
The one thing I know about a flat VIX futures term structure, especially this flat, is that it can't stay that way. We've either got to have something spook the markets and we go backward, and revisit what we saw in August, or things have to really calm down so that people pound down the front end of this term structure. Because right now, with the front end in the 1819 all the way out to March expiration, um, flat is a state of transition. It is not a normal condition. Um, it is a It is an undecided market. And I think, we have to get the election behind us. Whatever turmoil is going to come with the election results, and then we can begin to figure out whether this thing goes back to a more normal lower left to upper right. If it doesn't,
Okay.
that just means that um, kind of all bets are off. I mean, it's hard to trade a flat VIX futures term structure.
How about this, Jim? People think the VIX can only go up
Hmm.
when the market's heading down. And what about if, I call this a melt up, maybe S&P go to 6,000. Who
Hmm.
knows? Some people are saying seven, the rubber band stretch.
Yeah.
But what if the VIX during this melt up phase in the market, which I think we're in, actually doesn't go down but starts creeping up? What kind of message would that be? People are
Well,
hedging?
and we have seen that message, any number of times in history, and what it suggests is, that there are disbelievers, those
Okay.
damn disbelievers who are hedging with SPX options. Now, you will also, the other thing that we will sometimes see is stock replacement, right? Where people will buy SPX calls as a stock replacement. I'm not convinced that this, rally is going to be all out. So I'm going to maybe trim back my underlying and replace it with some call options. So you can get a bid for calls, along with a bid for puts, and any bid for SPX options, any increase in premium, whether it's calls or puts, causes the VIX to rise, right? It is indifferent to demand for puts or calls. It just looks at premium levels.
Okay.
So, we could very easily see the VIX kind of shadow a move higher in the S&P, because people are either buying puts to protect their portfolio or replacing stock with call options and bidding those up. We saw some of that back in with the meme stock craze a couple of years ago.
Yeah.
And
We
it
still have
wouldn't.
them. We still have them. Look at the children's place. Bankrupt stock that's tripled in the last few weeks. Um,
God bless
so
America, Dale.
yeah, yeah. So here we have. Let me ask you this, Jim. I know this is your wheelhouse, but I know you also have an understanding of everything. There, lot record buying in XPXL, low volatility, which is kind of a risk aversion trade
Yep.
up until recently. Well, still happening. Gold, which
Mm-hmm.
is kind of a risk averse trade.
Yep.
Bonds, risk averse trade.
Utilities,
Yeah, all those staples.
staples.
Uh, so this is how people are hedging, and finally, I mean, the Nasdaq's not at new highs with the S&Ps. I think
Mm.
it'll make a new high. Semiconductors, which led the whole damn thing, aren't even close
Mm-hmm.
to new highs. So it's a pretty conflicted market, not in unison anymore. And I see that happening in FX too.
Mm-hmm.
So there's starting to be some differentiation. So maybe people aren't buying VIX because they're moving into defensive areas of the market.
Well, I think, we clearly have seen that. I've seen that in my own relative strength models,
Yeah,
where utilities and staples,
yeah,
financials have also benefited because
they
everybody
have.
is assuming that as interest rates come down, the financials are going to do better. Real estate, although what continues to fascinate me is that the biggest real estate ETFs are dominated by communications towers and data centers,
Interesting.
um,
Yeah,
which is where all the market cap has gone. The market cap has left residential and commercial real estate, and 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 so real estate, with quotes around it, has also been a recent relative strength winner. Again, I think because people are banking on interest rates going down, not just 50 basis points in September, but that we're on a path back to lower interest rates, and that will benefit those real estate enterprises.
Okay. So anything you want your most important slide that you brought today?
Well, the flat VIX futures term structure is the most important volatility gauge that I brought today.
Okay.
One other one that I pay close attention to that really doesn't have, well, it is what I would refer to as volatility adjacent, is the high yield credit market. And,
Okay.
you know, spreads ain't
Tight.
blowing out.
No.
They're very tight.
Yeah.
And the other thing that I look at, which is something that very few people pay attention to because it actually requires some work, and I got to give credit to Tom McClellan of
Oh yeah.
McClellan Oscillator fame.
Yeah, Tom's great.
So he discovered that there was data on the breadth of the high yield market, advances and declines. And so he was fiddling around with it, and he said, maybe I'll run this on a cumulative basis. Give me a cumulative advance decline line for high yield bonds. And what he discovered was that it was a great canary in the coal mine. If you go back to the GFC, credit rolled over, 2011, credit rolled over, 2015, credit rolled over, 2018, credit rolled over. And rolled over, even if you go back and look at February of 2018, where we had that out of the blue volatility event, credit had already rolled over in advance of that. I mean, the S&P was screaming higher in January of 2018, and high yield bonds were saying, get out of the way. So, COVID was the only one where it was effectively a surprise. The beginning of rate hikes that caused the S&P to roll over in 2022. And the message today, by the way, is don't worry, be happy. So I find it interesting that this reasonably reliable indicator of stress is saying, relax, things are going to be okay.
That's what Charles Schwab said during a bear market once in a commercial. Relax.
Good for Chuck.
Yeah.
Good for Chuck.
All right. Well, Barry R just said what a nugget this slide is, and hopes you'll bring it back next time, and so we could see the progression of this.
Yeah, I throw it up on Twitter every once in a while. If people aren't following, they can find me at VIXologist. And yeah,
Definitely
always.
follow Jim. Everyone hearing my voice, do it now, or you'll forget later. As you can see, his handle's the VIX, but he looks at everything. And Jim's a great source of intelligence gathering for knowing what's going on in, some of the under the surface, a lot of the under the surface indicators. So, Jim, and you know what? I want to thank you every time you come. You go through the effort of, even though we don't always get through your presentation, you go through the effort of putting together all these slides for a presentation. And I really appreciate that effort that you go through to edify the FACE community. Great to have you as my trading warrior brother.
Well, Dale, you know by now that I appreciate the love, and we'll be here for you till the end of time.
Okay, let's keep this rolling, and appreciate it. You and I, Jim, will probably be talking in December. Who knows what kind of world we'll be looking at then? Right?
Very interesting, no
All right,
doubt.
I know you'll be okay. Keep the faith, brother.
You too.
All right. Jim
Be
Carroll,
well.
everybody. Follow him on X at VIXologist. And Jim, any writings or other things is really mainly what you put out on Twitter, what people can read about, that
Well,
your thoughts,
I'll tease I'll tease uh,
future.
I'll tease the future that I was recruited by Substack to publish on that platform, and there may be
Beautiful.
something in the works.
All right. Well, they'd be very fortunate to have your writings included. So, congrats, and I hope that happens so that people get to know your work more than ever. Okay,
I
buddy.
will I will let you know when it launches.
All right, Jim Carroll, everyone. Good hunting the rest of the day. Remember, don't just count your volatility strategies, count your blessing. And that's a wrap. And it feels like Friday to me already, but we'll see you all tomorrow. Good hunting, everyone. And thanks again, Jim.
Cheers.
All right, buddy.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.